Welcome to the next video, everybody. It's about diminishing balance of method, also known as reducing balance method. The name itself suggests the depreciation goes down. It reduces every year. Yeah, and we do not calculate like the straight line way. There is no residual value. But there is a percentage we calculate, but we do every time on carrying amount. Yeah, let's read what they are saying. It this method depreciation calculates the annual depreciation charge as a fixed percentage on the carrying amount, of the asset at the end of the previous year. Diminishing balance method may be used when it is thought that the benefits obtained by the business from using an asset decline over the time. What do you mean by that? Like you use your assets heavily in first few years, and later years you cannot use heavily. It declines and you can use less. For example, they're talking about a machine of a factory where the productivity goes down, declines as the machine gets older. That's why the depreciation kept going down every year. There's a formula to learn: depreciation percentage times by carrying amount. That's it. That's what you need to remember. Well, there is an activity right here, right now. Let's keep going over. Activity number 3, diminishing balance of a machine. A business buys a machine costing 6,000. The depreciation rate is 40% on a diminishing balance. They will tell you whether diminishing balance or SL, straight line method. This time it is diminishing method, not the SL. Well, requirement is calculate the depreciation charge. That's number 1. Accumulated depreciation, that's number 2. And you know what is accumulated depreciation? All last year's depreciations added up together. And carrying amount. And what is carrying amount? Cost minus accumulated depreciation of the asset for the first 3 years. All right, no problem with that. Just remember, we got to do 6,000 times by 40% for the first year, and then the first year carrying amount is the same as cost, but then we need to do 40% on carrying amount. Let's check it out then. Carrying amount first year is 6,000. Cost and carrying amount is the same thing. 40% is the rate. That's the rate column. Depreciation charge. How much is the charge? Let's take our calculator out here. Okay. 6,000 times by 40%. Got 2,400. Let's write it down here. 2,400. That's my depreciation charge. How much would be the accumulated depreciation? It's the same as depreciation charge because this is first year. That's why there was no depreciation from last year. We should be taken away. Accumulated depreciation taken away from the cost or from the net book value to get the net book value. So 6,000 minus 2,400 we got to do. Let's do it. 6,000 minus 2,400. 3,600 is the answer. 3,600 is the carrying value at the end of the year 1. But year 2, we got to do 40% on what figure? Carrying amount of last year, which is 3,600. And we got to do 40% on it to get the depreciation for this year, charge for year 2. So on that figure, 3,600, I'm doing 40%. 1440. 1440. That is depreciation charge for the year. But how much is accumulated depreciation? Is the adding up of these two together, isn't it? Yeah. Let's do it first. 1440 plus 2,400 from last year. Added up together 3840. 3840 is the accumulated depreciation, which should be taken away from your cost, shouldn't it? Yeah, and our cost is how much? Cost is 6,000. Yeah, so 6,000 minus 3840, that's for year 2. We are doing little working here, and I got 2160 in my calculator. That is your net book value, 2160, and that net book value is balance CD for year 2, but year 3 we need to bring it down, brought down 2160. We do 40% on it, I do have a calculator in front of me, times by 0.4. I'm saving little time here. 864 is the depreciation charge. But how much is the accumulated? Added up of all of it. Or you can add these two. Accumulated last year and charge this year is accumulated this year basically. So I'd like to add 3840 with 864, which gives me 4704. Should be taken away in year 3 from cost is 6,000 minus 4704. What you get is 1296. Okay, and that is the answer. Okay people, that's how you calculate your diminishing balance of depreciation. I hope there is another activity. Yes, exactly. Activity number 4 is on a vehicle diminishing balance. A business has the following balances relating to non-current assets, and we have balance 31st January 2018, that is opening, 31st January 2019, that is going to be closing. Yeah, opening and closing. What is happening here is vehicle at cost 50,000, cost will remain cost. We know this. Vehicle accumulated depreciation first year 2018 is 32,850, and this last year is not known. We know how to do it. We got to find the charge for this year and add up with the accumulated depreciation. So I believe the first requirement is charge for the year, and that's exactly what it is said here. Depreciation is provided at 30% on a diminishing balance, yeah, not a straight line, reducing balance, but diminishing is the word for your assessment purpose in AAT. Requirement: calculate the depreciation charge for the year ended 31st January 2019. What is the rule, people? You got to do on a percentage, 30 percentage on what figure? Carrying amount, isn't it? Carrying value. And how do you get carrying value? Cost minus accumulated depre. How much is our cost? 50,000 is the cost, isn't it? That is my 50,000. And how much is the accumulated depreciation? It is 32,850. So let's take a calculator. 50,000 minus 32,850, which gives you 17,150. 17,150. That's your carrying amount, and you got to do 30% on it. Hold on. Times by 0.3. 5145. 5145. And that is your depreciation charge for this year. That's what you got to write down. 5145. That's charge for the year. Yeah. And the number B, done. Number B being asked, calculate the updated accumulated depreciation as of 31st January 2019. Updated would be last year's, which is 32,000. Last year's means last all years, all accumulated added up together, plus this year 5145. So let's take our calculator out. 5145 is already there. Just got to add 32850. 37995. 37995. That's it. Easy peasy lemon squeezy. That's how you do. In our next video, we're going to talk about units of production method. Till then, goodbye.